this video, we're diving into Piermont Bank versus Mercury and asking the big question: which one is the better choice for small and medium-sized businesses? What's going on, everyone? My name's Eric Hunsaker, and on this channel, we cut through the fluff to help you make smarter business decisions. Here's the deal. Business banking often gets overlooked. Entrepreneurs are busy building products and finding customers, but the right bank is crucial. A solid banking partner provides peace of mind, access to capital, and time-saving tools. Now, two names that come up a lot in this conversation are Piermont Bank and Mercury. At first glance, they both look like modern options compared to the old school brick and mortar banks. But once you start digging, you realize they're built for very different kinds of businesses. So in this breakdown, we're going to look at how Piermont and Mercury stack up across all the big categories, like how easy it is to get started, what fees you'll run into, how they handle lending and credit, the tech side of things, and what kind of customer support you can expect. And then, by the end, I'll help you figure out which one makes the most sense for where your business is headed. The background. Who are Piermont and Mercury? Let's start with a little context, because knowing who's behind the bank that you're using matters. Piermont Bank was founded in 2019 in New York. Now, what makes it stand out right away is that it's one of the few women-founded, minority-led commercial banks in the country. Now, that alone gives it a unique identity in the financial world, which has historically been dominated by the same old institutions. Now, Piermont didn't set out to be another consumer bank with branches on every corner. Instead, it focused squarely on SMBs, small and medium-sized businesses, and asked, what do entrepreneurs actually need from a modern bank? Their answer was a mix of two things. First, the personal side of banking, where you actually have relationships with the people who understand your business. And second, the digital tools side, where you can manage your money online without constantly having to show up in person. Now, Mercury also launched in 2019, but it came at banking from the exact opposite angle. Now, Mercury isn't technically a bank itself. It's a fintech company that partners with FDIC insured banks to provide accounts. Their mission was simple: make banking so seamless for startups and online first businesses that opening an account feels more like signing up for a SaaS tool than applying for credit. So when you compare their DNA, Piermont feels like a modern commercial bank with roots in traditional finance, while Mercury feels like a tech startup that happens to offer banking. Now, that difference in origin really shapes everything about how they operate. Getting started, opening an account. This is one of the first places where entrepreneurs notice the difference between Piermont and Mercury. Now, with Mercury, you can open an account online in like under 10 minutes. You fill out a quick form, upload your incorporation documents, and you're basically ready to go. There's no sitting in a branch, no waiting around for a banker to call you, and no piles of paperwork. For founders who just want to get up and running, that convenience is hard to beat. Now, Piermont, on the other hand, takes a more traditional approach. Opening an account often involves connecting with a banker, going through compliance reviews, and having some back and forth. It's not necessarily slow. Piermont knows today's entrepreneurs don't want to waste time, but it's not the same instant self-service experience that Mercury offers. Now, you can open an account online. It's just a little more traditional. So the trade-off here is simple. If you just want speed, Mercury feels amazing. But if you actually want a human relationship with your bank right from the start, Piermont's process gives you that. So think of it like this. Mercury is like signing up for Netflix. Piermont is like sitting down with a financial advisor who actually asks about your goals. Both work, it just depends on what you value. Fees and pricing. Money always matters. So let's talk about what it costs to keep your account open. One of Mercury's biggest selling points is that there are no monthly fees and no minimum balances. That makes it super attractive for startups or small businesses that don't want to worry about paying a penalty just for having an account. You'll still run into fees if you're sending wires or doing foreign exchange transactions. But for the day-to-day stuff, Mercury keeps it simple and affordable. Piermont is a little different. Because it operates as a commercial bank, it doesn't publish a flat one-size-fits-all pricing structure the way Mercury does. Instead, fees and account requirements often depend on your relationship with the bank. For example, if you're a bigger client bringing in a significant deposits or applying for a credit, Piermont might waive certain fees. But if you're a smaller account, you might see minimum balance requirements for service fees. This is where Piermont leans into being a relationship bank. If you're serious about growing and you want access to lending, the fees might be worth it because you're getting more in return. If you're just trying to stretch every dollar, then Mercury feels more transparent and startup friendly. Lending and access to credit. This category is one of the biggest differences between the two. With Piermont, lending is at the core of what they do. They offer lines of credit, term loans, commercial real estate financing, and tailored lending solutions. And because they're a chartered bank, they can actually underwrite you directly. That means they can look at your specific business situation and come up with solutions that fit, instead of just plugging you into an algorithm. For entrepreneurs entrepreneurs, this is huge. If you're trying to grow, having access to credit can be the difference between taking on new opportunities or missing them. And Piermont has built its reputation around helping SMBs get capital that traditional big banks might pass on. Mercury, on the other hand, doesn't lend directly. They've tried to bridge the gap by offering Mercury Capital, which connects businesses to venture debt and revenue-based financing partners. But at the end of the day, you're not borrowing from Mercury. You're being referred to third parties. So here's the deal. If you know you'll need financing in the next year or two, Piermont is the stronger choice. If you're running lean, you don't expect to borrow, and you just need a place to hold your money, Mercury does the job. Tech and integrations. So this is where Mercury really shines. Mercury's entire pitch is that its platform is clean, modern, and built for startups. The dashboard feels like software you actually want to use. You can manage multiple accounts, set up team permissions, automate bookkeeping, and integrate with tools like QuickBooks, Stripe, and Shopify. For tech-savvy founders, it feels natural. Piermont has been making moves here with the API-driven banking and banking as a service partnerships. They're positioning themselves as a tech-forward commercial bank, but at the end of the day, they're still a bank first. That means their focus leans more towards compliance, security, and making sure larger SMBs have reliable systems rather than building flashy dashboards. If integrations and automation are your top priority, Mercury is the clear winner. If you're more interested in lending and relationships, Piermont still has the edge. Customer support and relationships. Now let's talk about something that gets overlooked a lot: customer support. With Mercury, most of your interactions will be through chat or email. Now, their support is fine, but it's not very personal. You're not likely to have a banker who knows your name. That's by design. It's more self-service, and for a lot of entrepreneurs, that's okay. Piermont takes the opposite approach. Their whole model is built on relationships. When you bank with Piermont, you're assigned real bankers who actually get to know your business. That can make a huge difference when you need to negotiate loans, troubleshoot complex issues, or just have someone you can call instead of waiting for an email reply. So this one comes down to your style. If you're fine with self-service and chat support, Mercury is no problem. If you want the old school benefit of having a banker on your side, but with modern tools backing it, Piermont gives you that. Which bank is best for SMBs in 2025? So at this point, you can see that Piermont and Mercury are designed for different kinds of businesses. Mercury is best if you're a digital-first startup. You want something simple with no hidden fees, fast setup, and slick integrations. You don't need a loan, at least not right now, and you just need banking that won't slow you down. Mercury feels tailor-made for that situation. Now, Piermont Bank, on the other hand, is best if you're growth-minded and want real access to capital. If you value having a personal relationship with the banker where you expect to borrow money as you scale, Piermont is the better partner in that instance. It's not about quick sign-up. It's about building a long-term relationship that helps your business grow. If you're early in your journey and you just want a fast, free way to manage money, Mercury's hard to beat. But if you're building a business that's going to need capital and you want a bank that can grow with you, Piermont is the stronger choice. At the end of the day, it's not really about which bank is better overall. It's about which bank is better for you, based on where your business is and where you want it to go. Now, if you want to get started with Piermont, we've got a link for you down in the description, which will bring you to this page right here. All you need to do is click on Open Your Account Now to get started. And if you want to get started with Mercury, go ahead and just click the link down in the description for Mercury. And that's going to bring you to this page right here, where you can go ahead and just enter your email address to open an account. Again, links are down in the description below. Now, these are affiliate links, which means we do earn a small commission if you use them at no extra cost to you. And these commissions really help support the channel and allow us to continue to create content just like this. So if you end up using them, we thank you so much in advance. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss another video. Here on this channel, we make videos dedicated to helping new and existing entrepreneurs get started and succeed in business, so be sure to subscribe. But other than that, thank you so much for watching, and we'll see you in the next video.